The Prudential Regulation Authority is a United Kingdom financial services regulatory body, formed as one of the successors to the Financial Services Authority. The authority is structured as a limited company wholly owned by the Bank of England and is responsible for the prudential regulation and supervision of banks, building societies, credit unions, insurers and major investment firms. It sets standards and supervises financial institutions at the level of the individual firm. The PRA was created by the Financial Services Act 2012 and formally began operating alongside the new Financial Conduct Authority on April 1, 2013. As the Bank of England is operationally independent of the Government of the United Kingdom, the PRA is a quasi-governmental regulator, rather than an arm of the government per se. The PRA has its main offices at 20 Moorgate, near the bank's central offices on the Threadneedle Street. Role: the PRA's role is defined in terms of two statutory objectives, to promote the safety and soundness of the firms it regulates and, specifically for insurers, to contribute to the securing of an appropriate degree of protection for policyholders. In promoting safety and soundness, the PRA focuses primarily on the harm that firms can cause to the stability of the UK financial system. A stable financial system is one in which firms continue to provide critical financial services, a precondition for a healthy and successful economy. It will have close working relationships with other parts of the bank, including the Financial Policy Committee and the Special Resolution Unit. The PRA's most significant supervisory decisions will be taken by its board, comprising the Governor of the Bank of England, the Deputy Governor for Financial Stability, the Chief Executive Officer of the PRA, and independent non-executive members. The board will be accountable to Parliament. The PRA's approach to regulation and supervision has three characteristics: a judgment-based approach. The PRA will use judgment in determining whether financial firms are safe and sound, whether insurers provide appropriate protection for policyholders and whether firms continue to meet the threshold conditions. A forward-looking approach: the PRA will assess firms not just against current risks, but also against those that could plausibly arise in the future. Where the PRA judges it necessary to intervene, it will generally aim to do so at an early stage. A focused approach: the PRA will focus on those issues and those firms that pose the greatest risk to the stability of the UK financial system and policyholders. The PRA approach to supervision will not seek to operate a zero-failure regime. Rather, the PRA will seek to ensure that a financial firm which fails does so in a way that avoids significant disruption to the supply of critical financial services. References. External links: official website,